I don't know if it's going to get the stock back up or down more than 2%. Tim Bigham joins us for a trade this morning, option strategist at Buy Alerts. Tim, we got Apple just heavy in the last 2 days. Of course, it was the opposite and outperforming for several weeks. So how do you make sense of it?
Yeah, absolutely. And speaking of, big icons, I'll match my icons against yours anytime at my age. I'm running out of scream room for one letter here, but
hey, speaking of luck, they're calling the new Apple project. One of them is luck. You got an early St. Patty's going on there.
Well, you got to start St. Patty's early. I think it's, the week before is when the celebration should truly begin in honor of basically the old days on the trading floor. We certainly started early back then, pretty much every day, but we're looking at Apple that's approaching a little bit of major support here around that 220 level. Certainly the stock has been hit hard, to say the least, over the past week, along with the rest of the market. Then the, stock-specific kind of news that took it even further down. So I'm kind of just looking for nothing much to happen here over the next week and a half, taking advantage more of the fact that implied volatility is at by far the highest level we've seen over the past year, even higher than during earnings, even higher than Volmageddon Part 2, I'm calling it, last August, that brief kind of spike in the VIX. So huge amount of nervousness here in Apple. So I'm just going out and positioning with an iron Condor trade that expires a week from Friday, traditional marches, selling that 220, 217 and a half put spread, thinking that 220 level may hold here. And then to the upside, absolute resistance now around that 233 level. So selling the 232 and a half, 235 call spread at the same time, collecting $1.50 overall premium. So, lowering my risk to only $1 and potentially making $1.50 if Apple can just kind of stop going down, doesn't have to, do much else here. And I think that's what the market's going to see out of not only Apple, but just stocks generally, is I don't expect a big bounce. Everyone's hoping for that. I think a bleed out sideways, a period of consolidation here is probably what's in the cards, because we're certainly going to continue to get chatter out of Washington, and the macro news will be less than ebullient probably. So I think it'll be big range, no change here, not only for Apple, but for the market generally. Time to sell premium on both sides.
That's a good market adage I've never heard before, Tim. Did you just make that one up? Big range, no change?
Up here on the fly, absolutely.
That's brilliant stuff. Big range, no change. I love it.
Yeah, it's brilliant in my context. Yeah, exactly.
Well, it's kind of appropriate. I mean, it does seem like, given how much trading in Apple happened from last summer into the fall, basically above $220, that was an area that kept acting as some support. So I feel like that's kind of the baseline of this, is maybe that area kind of acts as somewhat of a magnet.
Yeah, absolutely. And I think, if you do get a bounce, it'll probably be off that 220 level. We might see it dip down and rebound here. And then you can always adjust, the call spread or the put spread, down or up a little, pick up even more premium, bring that $1.50 credit maybe up to close to $2. So I never mind risking 50 cents to potentially make $2 on a sideways price move here. So I kind of like this trade. Really, it's a capture trade indirectly on both sides of the market here as much as anything else. And I think at some point you'll see some value players start to look at Apple down around here finally, just given kind of that, they do pay the divvy and they do make money certainly going forward. So Apple looking probably attractive to some of the big boys here as it dips lower.
Okay. The range there that you've got shifts a little bit. If I kind of think about that 220-ish, we're basically out of some kind of support. The range that you have shifts a little bit to kind of the lower half of that, obviously. Or maybe I guess it's the other way, right? It's to the upper half.
Yeah, I'm slightly overall net bullish from
there it is. 218 your downside. Okay, yeah. So you're biased a little bullish.
Yeah, leaning a touch bullish, not egregiously so. And that's more given the drubbing that Apple and the overall market generally has kind of suffered here. And I really like looking at out-of-the-money put spreads in this market environment to, take advantage of this huge jump in IV in a guarded fashion. So that's really the trade structure I'm employing across the board, not only on Apple and Apple-type stocks, but just generally here. At some point, as we know, the VIX implied volatility will come down. That will benefit this trade structure in a big way.
Okay. All right, so leaning bullish Apple after the drubbing, but giving yourself flexible breathing room equivalent to roughly $4 to the downside, essentially. So you can kind of set it and forget it as long as Apple doesn't drop that amount, basically. What happens if it does start to trade below that 218, Tim? How do you manage that?
I'll probably just move down the call spread or just sell a new call spread because that one we put on right now will probably be worth almost zero. So you can continue to sell premium chop, what as I call it, to further hedge this trade and, define your risk up front with only risking $1. If you can bring in 40 or 50 cents more premium, you've basically limited that risk to almost zero. I never mind that at all here. Low risk, high reward trades in this market environment makes sense. Define your risk and hope you get that Ron Popeil trade, as I call it, set it and forget it like you alluded to.
Okay. So if it starts to go against you, you can basically replicate it again, just down lower for different premiums and kind of slow down some of the momentum if it accelerates to the downside like that. Thanks, Tim. Appreciate the trade.
You bet. Anytime. Take care and happy pre-St. Patty's Day.
Happy pre-St. Patty's. Love it. Tim Bigham, option strategist at Buy Alerts.